Boy, there has been a lot of FUD around Tesla, and I kind of get it because, it's kind of frustrating. You see a lot of companies going to the moon right now, and yet still Tesla's kind of lagging over here, right? This was an alert that I sent out to course members. I haven't shown this one yet to the public. I thought this was really funny, though, because on the 8th, I added 420 shares to NVIDIA to the already 1,337 shares I had, which is leet in gamer speak. And I thought it was really funny because the JPM guy read that back as, okay, so I show you have 1,337 shares and we're adding 420. You got it. That was pretty epic. But anyway, like this part here I've shown before, I was frustrated that Tesla is down 29-ish%, maybe even now like 31% year to date. And it's kind of frustrating because a lot of companies aren't down like this, right? Apple -8, Microsoft -14, Google 17.3, the NASDAQ is down around 19%, NVIDIA is down more at 42%, and some of the smaller caps that got crushed and profitless companies that got crushed are still down larger, like 60-70%. But in terms of large, it's frustrating. And so on the daily, when we see the NASDAQ go up, or maybe it's like down 1/4 to 0.5%. Why is Tesla either just red or down like 4 times as much as the NASDAQ? And there are a few things that we really have to talk about here because there's so much short-term FUD. And one of the things that I realize, and we talk about all the time in the Stocks and Psychology of Money course, is really that there's fundamental analysis that you can do that gives you conviction to stay in a stock. But it can take a while for that fundamental analysis to actually be reflected in a share price. And oftentimes, that share price, let's just say for Tesla, might be $1,500. You could be bobbing around below that under Twitter FUD or other FUD, and then when we actually get to 1,500, we might not stop there. We might then go from FUD to FOMO and go $2,000, $2,200. That could literally happen by the end of 2022. In fact, I kind of expect it will. Of course, no guarantees. But the point is, what the actual stock price of a company is rarely matches its fundamental value. There's a reason why when Enphase goes down to $120 to $150, the company buys back its shares. And that's when I buy Enphase, because they're smart. They know their fundamental value, and when they're buying, I'm buying. I've done it many times, and I've traded on their moves, and it's worked out great. Obviously, I send those alerts to those of you in the Stocks and Psychology Money group, which you could join if you check out the link down below, but this is beside that point. What matters right now is that Tesla is kind of bobbing around that 860 level. And we want to know, where do we actually think Tesla's share price is going to go? And is it something that we should be concerned about? That, wait a minute, Kevin. Elon Musk sold at the top 3 times now. He sold back in, I think it was early December when Tesla was around $1,200. Then he sold around $960 in April. Now he's selling around $869 here in August. And the whole time, these have been the lower highs for Tesla. And so it's kind of like, is this concerning? Like, should our fundamentals at Tesla be shaken because Elon maybe he knows he did call the recession coming, so maybe he knows that now's the time to get out. In fact, when he just sold shares on the 5th, 8th, and 9th, of which I happened to buy some of them on the 5th, everything was green, and I'm like, Tesla's red? This doesn't make sense. It turned out it was Elon selling, so I bought some of his shares, which is kind of funny. But anyway, it's so weird because, oh my gosh, here we are in this situation where people are thinking, okay, that's it. The fundamentals are broken. It's over. And look, Elon's been pretty good about timing in the past, but what do I actually think is happening here, and what are the core topics that we got to address? Let's hit them. So first, let's talk the new EV tax credit and some FUD that's coming out of this. Then let's talk about the Twitter disaster and Elon sale. We'll keep that one short. Obviously, then we'll also talk about some fundamental analysis. We'll keep this relatively brief. I'll talk a little bit about the demand, China, my experience with Tesla deliveries, and then also some price targets in my spreadsheet. So we'll try to keep that brief. Okay, first, Inflation Reduction Act. Look, there's a lot of FUD going on around this, and I was one of the first people to break this when I broke down the Inflation Reduction Act, and I actually read through it, and I'm like, oh my gosh, I mentioned this on Twitter and both on a YouTube video. This is interesting. They've now loosened the definition of vehicles that qualify. Instead of being electric vehicles that qualify for, basically EV tax credits of $7,500, now they're clean air vehicles, as long as 40% of their batteries are manufactured in the United States. But this really opens up hydrogen vehicles and hybrids have substantially smaller batteries, so it's a lot easier to manufacture 40%. So a lot of people think the lobbyists for like Ford and GM are getting this tax credit for basically their crappy hybrids. Okay, they're not crappy hybrids, but you know what I mean. I'm making a Tesla video here, okay? So I have to be a little biased. I have to be a little Tesla fanboy. And I am, okay? I mean, I got a big position and over 26,000 shares on freaking Tesla, right? Anyway, so I gotta be a little biased, okay? Let's make that very clear, okay? Anyway, so a lot of people are fudding about this because they think, crap, okay, like the lobbyists win, Biden screwed us again, and Tesla's not gonna be able to qualify because we've got a few things. One, 40% of their batteries probably aren't, made in free trade countries like Canada, America, or Mexico. In fact, most of Tesla's lithium hydroxide currently comes from either China or Argentina. Cobalt typically comes from the Democratic Republic of Congo or China. Graphene mostly comes from China. Now, we do source some local nickel production, again, here locally. Copper, not generally found much like heavily, at least by weight, kind of depends on how they measure this 40%, but not so heavily found in batteries. But then again, I'm also not a battery chemist, so maybe I'm wrong about that, but I don't think we really have much copper in the batteries. These are generally in the motors, and even though Tesla wants to source some copper from the United States Redwood Materials, which was founded by somebody who used to work for Tesla in the early days with Elon Musk, right now, it just doesn't seem like Teslas might qualify. Even if they did, though, you have to consider that the S and X won't, because SUVs are limited in how much they can sell for to actually be able to get the credit. Sedans, and the same for sedans. Sedans can't sell for more than 55K, so there goes the Model S, both the regular S and the Plaid. SUVs can't sell for more than 80K, so there goes the Model X. The performance Model 3 wouldn't qualify, so you're really only talking about the Ys and the cheaper 3s, which, I mean, that's honestly most sales. Now, they could qualify, and here's what I expect Tesla to do, and this is just totally my opinion, but $7,500 of free government money is a lot of freaking money. Even if it costs Tesla as much as $1,000 more per vehicle to rejigger the supply chains for the lower-end Model 3s and Ys, and then also the, and then the Model Ys, it would make sense to do that. Because, see, when you look at tax credits from an economist point of view, here's generally how they work. Generally, when you get like a $7,500 handout from the government, that $7,500 is split between the business and the customer, assuming it's a tax rebate for something, right? Not always. It's not always 50-50. It depends on demand and supply and other factors. And so this is going to skew something for Tesla. But let's just say we're, just as an example, GM, okay? And you go buy a hybrid with them. I wouldn't be surprised if about half of the tax credit is a benefit to the consumer, even though they feel like they're getting the full $7,500. The other half is probably them paying, $3,750 more for the vehicle. That's my guess. From an economic point of view, usually government incentives are split a little bit on both sides. Then there's some deadweight loss, but don't worry so much about that. That just makes it really complicated and confusing. The point is, don't think about it as, oh, the consumer's up $7,500. No, the company obviously takes some profit as well. Now, because Tesla has so much excess demand, they don't necessarily have to be more competitive at the moment. They could probably realize like 90% of that $7,500. So, that could be somewhere around, 6,000, like $600, and realistically, 600, maybe $6,700, whatever. Just quick mental math, doesn't really matter. Somewhere around there, over $6,000. Even if it cost them an extra $1,000 to rejigger the supply chains a little bit, that'd still potentially be an extra $5,500 of profit for Tesla. And I'm rounding here with the numbers, but the point is to say Tesla's probably going to get the bulk of that tax credit, not the consumer. Because if it weren't for that tax credit, the prices would probably come down. The tax credit will allow Tesla to keep the prices up because they have so much excess demand, and they'll figure out how to get to that 40% level. I'm pretty dang confident they'll be able to figure it out, because that's a lot of money, and it's gonna drive Tesla's margins through the roof, and people are gonna go, holy crap, Tesla's actually selling vehicles with a 35% margin instead of 30% margin? This EV tax credit is huge, and Wall Street just doesn't get it yet. They're gonna have to see it in reports, and I could be wrong, but that's my expectation. The EV tax credit is mostly going to be sucked up, in Tesla's case, by Tesla, not the customer. The customer is gonna feel like they're getting a $7,500 check. but it's a lie. Tesla's getting most of it, okay? That's my take. And again, that's why Tesla will probably do whatever they can to make sure that their customers will be able to qualify for that. Obviously, there are other constraints as well, but we don't need to hit all of the constraints right now. I just want you to know, I believe the EV tax credit is extremely bullish for Tesla. And you know Elon, as soon as that act passed, got on the phone with people at Tesla, like, figure it out, make it happen. It's 40% in those batteries, otherwise they ain't going out like the door. We want people having those $7,500. At least that's what I would do. I mean, realistically, it's like, again, if you have to spend a little extra money to ship it around, you're going to make money on that decision. So I'm happy about that. Now, we got to talk briefly about the Twitter overhang, Elon selling shares, and then I want to show you my spreadsheet, valuation, some updates and things like that. But first, a quick message from our sponsor, Tendies. Now, you've heard me talk about them before. Tendies gives you integrated options flow totally for free. And I've seen comments asking, why is it only on iOS? So here's the big news. They just launched their web version. It's right here. With the Tendies web platform, you can connect your own brokerage so you can monitor your performance and do the necessary research to be profitable in this environment. You just go over here to connect brokerage. The options flow data shows whale purchases and ranks the bid-ask spreads to highlight market disconnects you can take advantage of. Take a look at this. I can just go over here, and first of all, I can see a lot of activity. Looks like we got a VIX play going here with calls on UVXY. We've got Roku and QCOM, but let's go ahead and see what's going on with Tesla. Ooh, looks like we've got a lot of activity on Tesla puts right now, anywhere between 870 to 950 puts on Tesla. We've even got a put over here with 9 contracts at $600. But boy, if you're looking for that big monitor, look at that, an 850 put, that expires tomorrow. Yikes, that's gonna be a lot of money that has to get redeployed when that time comes and that option expires tomorrow. Fingers crossed Tesla doesn't go that low tomorrow, but then again, you know, if I click on the option, I'm like, oh, wait a minute, we're pretty dang close, and we're falling into the close. We're down 2.36% today. We're at 862.15, and take a look at this. You can get even more details just by clicking on it. It's a pretty neat platform, and the cool thing is, it's a totally free. Other companies on Twitter sharing options flow data are charging anywhere from $40 to $350 a month for the same type of data that Tendies is literally giving away for free. Brokerage Connect supports accounts with Schwab, TD Ameritrade, Robinhood, Webull, and Fidelity. Now, once you connect your brokerage, the due diligence is all in one place for you. So filter out the noise and use Tendies. I love it, and make sure you click the link in the description to give some free credit over to Meet Kevin. It doesn't cost you anything. Add your brokerage so you can take advantage of this market chaos. Link in the description for free options flow data, and check out Tendies. All right, welcome back. Now, if you haven't yet followed me on Twitter, I highly recommend you do so, because you see me reply to things sort of on a whim like this. There was a CNBC article that says, self-made millionaire, don't buy a home unless you can afford to waste money. And I'm like, what? That's a dumb headline. So before even reading the article, I wrote, that's a dumb headline. And then, of course, when I actually opened the article, I had to reply again, oh my gosh, I wrote that before seeing Grant Cardone authored the article. Now I can definitely say dumb article in addition to dumb headline. But anyway, the point here was to go to my reply to Gary Black, where I agree with him. Gary Black is basically telling us that, hey, look, at this point, here's the little spreadsheet for it. Bottom line, Elon probably at max only needs to raise another $2 billion. So yes, Elon Musk, you already know this, sold $6.9 billion of Tesla shares. I don't know why it always has to end in 69, but you know, the average price of his sales was $869 as well. So it's, I don't know how they engineer this stuff, but it's pretty remarkable. But anyway, an extra $2 billion bucks, okay, whatever. Like maybe he could make that, you know, happen through financing or whatever else. The point is, it seems like if Elon is forced to buy Twitter, which Elon said the reason he was selling is just in case he's forced to buy it, he doesn't want to have to sell Tesla stock at potentially depressed prices. May as well do it at this point, because we don't know what's going to happen with the macro economy. What if Shanghai shuts Tesla down again and Tesla goes down, right, in value because people freak out again at missed deliveries, blah, blah, blah. The point is, hopefully Elon should be done selling for now, but then again, he did tell us in April that he'd be done selling, so you just don't know. At this point, I just want to make it very clear. I think there's a very, very high likelihood Elon Musk is just going to get a haircut of a price reduction, maybe 7%, maybe 6.9%, who knows. I kind of think he should probably get like a 15% price reduction. That's probably what I'd be trying to go for. If I can get more, great. If it's a little less, whatever. But the odds are he's going to buy it. If he doesn't buy it, he's already told us on Twitter that he's going to rebuy his Tesla shares. I kind of doubt that, but okay, hey, great, fine. Either way, hopefully he's done selling. I will say regarding the Elon Tesla thing, here's just the bottom line thing that you've got to know about it. I really respect your time, so I want to keep it simple. Just, bottom line, I really believe it's possible that Twitter just really doesn't care about the bot number. And even though that's bad business, it's not fraudulent. As long as they have one person at their company that counted 5 bots out of 100, and then they could make the estimate that, yeah, it's about 5% plus or minus. And see, I did a test. I was shocked, but I went through one of my comment threads. So I posted a tweet. I got about 100 replies. I went through it. I only found 2 bots. Now, I think it's skewed for Elon because there's way more engagement, so the bots have a lot more value posting spam comments there, and so he might see a lot more, which might lead him to believe that Twitter's a lot more spammy than maybe it is for me. Sometimes I get spam, but again, not always. But anyway, if one person just went to my profile at Twitter and the CEO's like, hey, yo, go pick someone's profile and count how many bots there are, and they picked mine, and then they counted 2 bots, or 5 bots even, let's say, that the time they checked, okay, well, there you go. They made an estimate. It's about 5%. That's stupid. It's a really bad way to do it, but it's not fraud. And Elon's got to win a fraud argument here. That's tough. If it is proven that there was fraud, Elon will win hands down and he'll walk from this deal. And he's already alluded to starting a social media company called X.com. Just don't bother going there because there's literally nothing there right now. It doesn't even really load. But anyway, what do I know, okay? I'm like a 30-year-old dude who's drinking out of a level 99 Slayer Cub like a 6th grader hoping to make out with his crush after getting pizza at the school cafeteria and realizing that's not gonna happen, so instead going to the vending machine and buying some sweet gummy worms and sucking on those instead. Anyway, a course member today mentioned something that they thought was interesting. They sent me this screenshot. They're like, hey, Kevin, usually Teslas don't sell used for like a 12% discount. Generally, they sell for at or more than what the listing prices are. And my reply to this was, hey, yeah, I do think there's a chance that, demand could get cut down during a recession. That would be normal. But the other thing that I thought was really interesting was, who the hell parks a Tesla Model S on gravel in the middle of a freaking field? Like, if that's how they're treating the car on the outside, imagine what the inside looks like. It's probably a smoker vomit mess. Or I'm just a Tesla bull who doesn't want to believe that it's possible that demand could go down. After all, Tesla's, Troy-like Tesla, Troy Tesla-like is his name on Twitter. He's great. He does give us a little bit of insight into demand, which I think is pretty cool. Take a look at this demand. He sees that the current measure of Tesla's order backlog is around 500,000 vehicles. That order backlog has almost doubled since Q4 of 2021 based on his estimates, right? These are not official Tesla estimates, but this guy is really good. Like, he's on it when it comes to this kind of stuff. So I think it's really, really incredible. But anyway, so you can get some other numbers here, but go follow him on Twitter. I think he's brilliant. I'm not going to give all of his stuff away. You can follow other, Gary Black as well, whom we have mentioned here. I do want to talk price targets. And delivery timeframes. Like there's this guy over here, Ray for Tesla. He's like, hey, my delivery timeframes are going down for my vehicle. I was told that my Model X, my new blue Model X, would be ready in like September or October. They called me in July while I was in Europe and they're like, hey, it's ready. So I kind of do believe that these delivery timeframes are going faster. Some people say, hey, that's bad. That means demand is going away. But when you look at this order backlog and you have basically, 6 months of an order backlog, I'm not terribly worried about it, the order issue right now, especially the commentary that we got out of Zach and Elon on the last earnings call about how, no, they're not really seeing an impact to the order backlog, or Elon saying, well, it really follows sentiment. So like when the market was really crappy in June, look at that. You kind of saw flat increases in the backlog. Not a surprise, because this was like the crappiest time of the market, right? Now we're seeing green again. I wouldn't be surprised to actually see the backlog increase. So I can't really be worried about demand going down. And if anything, if they can ramp up faster and we get a larger backlog, well, then that's just doubly good. But yeah, look, there is a possibility. Hey, we're in a recession. That demand goes down, and at some point, Tesla's going to have to drop some of its prices, right? But that will come. So there are some people talking about Chinese demand potentially going down, especially since Tesla sales in China were down 64%. But then again, the factory shut down for major upgrades. That's actually going to allow Shanghai to ramp even more quickly. So like, that's not really a bad thing. That's a good thing. Not worried about that. But even if like China's economy collapsed, because every YouTuber's doing the China economy's collapsing clickbait right now, like, okay, whatever. This is why I invest in United States companies, okay? But anyway, whatever happens in China, in my opinion, it doesn't matter. If anything, if there's less local demand in China, it just frees up more raw materials for Tesla to produce more Teslas in China and ship them back to the United States or somewhere else, right? Not a big deal to me. Deutsche Bank has a price target of $1,125. They see little demand reduction, and they also view Tesla as one of the best buy targets for autos and one of the best stocks for the second half of the year. They think Tesla's going to get to about 2.4 to 2.5 million vehicles of capacity by 2023, and they think the second half of 2022 is actually where we're going to see some of this explosiveness. Morningstar has a price target of only $760, but they see Tesla as very uncertain, and I'm pretty sure that once that uncertainty on Wall Street goes away, that Tesla's actually going to keep delivering these sorts of vehicles, that the price will skyrocket. That's just my estimate. Let's briefly go to the spreadsheet. I haven't changed pretty much anything from the spreadsheet since the last time we did it. I did add this because some people are like, oh, Kevin's so negative about Tesla's cash flow. Kevin said in the last video that Tesla's gonna have to raise money. Well, here in the Tesla earnings report, they say they don't have to raise money. And I'm like, dude, Tesla themselves said, as long as we don't have to shut down again. And that's what I said in my videos. Like, if Shanghai shuts down, or Berlin shuts down, which is unlikely, they're going to have to raise money again. And they're going, because their operating cash flow will plummet. You do not want a Shanghai shutdown, okay? We just had another city. Literally today, I woke up this morning and I saw a notification. City of 1.4 million people locked down today, August 11th, 2022. It can happen. Tesla is not immune to bad shit happening, okay? So, God, like, I don't know how bullish I could be, but like, if you're like a 90% bull, the Tesla community's like, fuck you, man. I shouldn't have said that. Sorry. People watch this with families around. I apologize. but see, that's what it feels like sometimes. I'm like, no. Like, I put my money where my mouth is. Like, how much more bullish do I need to freaking be? I ain't going to 100%, okay? Because I gotta look at the bad, too. So important. Anyway. Supply outpacing demand, come on, we're not even seeing that. So really what we've got here, look, my estimates for 2023 are only 2.2 million vehicles. That's like shy of what even Deutsche Bank is recommending. They think we're gonna be at 2.5. Okay, that's huge. That's gonna make that 2025 target of nearly 6 million vehicles a lot easier. And I know some people are like, oh, but Kevin, will they even be able to sell those vehicles? I think so. I don't even know if I want to entertain that, but honestly, if we can get Teslas down to like a 1 week delivery time, dude, we would be selling probably 2 to 3 times as many Teslas, maybe even 4 to 5 times as many Teslas, because people don't want to wait. My neighbor's like, Kevin, listen to this. People think that somehow I have power. My neighbor, literally, right there, out the freaking window, he's like, hey, Kevin, so, got any connections? I've got a reservation for a Model Y, but I don't want to wait the 8 months. I'm like, dude, no, I can't even get mine faster. And he's like, and just drives away. And then I see him like 2 weeks later driving some otother car. And I'm like, what happened to waiting for the Tesla? He's like, I didn't want to wait. And he's driving around in like a GMC or some crap. Like, okay, whatever. Whatever, dude. So, okay, look, what matters here, you just give a crap about the bottom line, okay? I'm a bottom line kind of guy. You want bottom lines on fundamental analysis, you come to the course member live streams, okay? They get like 4,000 to 7,000 views every freaking day. And it's people go there because they know the information is good and the value is good. And I really think you should be there too. Otherwise, I think you're missing out. Anyway, so look at the price target here. What do we got? We got, price today is $860. That puts them at a forward PE ratio of only 25.85. PE ratio in 2025 sitting at about 66 to get to a future price of $2,200. Now, if we go ahead and change this and just bring it down to 45, okay? That's still $1,500. $1,500 as a future value is still a 15% annual compounded rate of return for the next 4 years. It's still really, really freaking good, okay? If we get the 66, in 2025, because it's gonna go down over time, right? Then you know, maybe we're looking at like a 26% rate of return. That's freaking phenomenal, okay? Like, it's great. Now you should diversify. Like, you should diversify into real estate. You shouldn't be all in on one stock. That's a really bad idea. But anyway, I gotta go. Thank you so much for being here, and we'll see you in the next one. Bye.